right, well, revenue from the biggest bank in the U.S. could actually fall as much as 50% in the third quarter. That's investment banking revenue. That's according to JPMorgan President Daniel Pinto. For more, Bloomberg Wall Street correspondent Sonali Basak joins us now. We usually get an update on what the trading revenue looks like for the third quarter. What do we know so far?
I think what's really important here is that the investment banking fees are the ones that are being seen down, and the trading fees are actually expected to be up a little bit in the single digits, about 5%, he said, at the conference hosted by Barclays. I think you're also seeing Morgan Stanley's Andy Saperstein also speak at a conference saying that investment banking is expected to be muted this summer. So when it comes to the context of Wall Street jobs, worries about future activity, you're still seeing trading being that buffer. And of course, over at JP Morgan, you're also seeing some huge changes come along with that trading gains that you've seen persist throughout the year in a volatile market. Remember, the reason, Alex, this is so interesting and so important is that for the first time, and Bloomberg's handle of it crunched the numbers on this, since at least 2006, you have JP Morgan really taking the top spot in equities trading, and the leader of that business also taking over global credit markets, according to a memo obtained by Bloomberg today.
Well, let's talk a little bit about that. This is the fallout from Guy America's departure and his soft-top Saab. Do we now know exactly who's going to be filling the key roles and how the changes are going to work their way through?
Yeah, I think what's important to watch is the two people that were announced in the memo today, really their roles being expanded. And that was, as I was saying, Jason Sippel. He was leading equities globally. He's taking over global credit markets. And now you also have Pranav Thakur, who is the head of global macro markets and emerging markets. That's the expansion of the role. Also oversaw currencies and other businesses as well. Guy, you know this, that JP Morgan has really been the 10,000-pound gorilla in the room when it comes to fixed income trading. I think that recent rise in equities trading just makes this such an interesting and important time. I think, and we've been talking about this so much, that relative strength of JP Morgan as an American bank and its expansion further and further into Europe and the rest of the world, and the continuation of that as global macro retains to be an interesting place on the buy side. You have them expanding in prime brokerage. You have them expanding as their clients are also growing in the space and doing very well this year. And as rates, currencies, and commodities continue to be an interesting and attractive space and a buffer to a lot of those really big businesses that have taken a downturn this year in the investment banking side.
Morgan Stanley co-president also speaking at a conference saying that banking has remained muted and also muted through the summer. And I'm wondering, like, what does that mean?
Yeah.
And also, JP Morgan just can't be alone in dealing with certain things like this.
I guess about an hour and a half ago now, you had that investor call about the big Citrix deal with Credit Suisse and other banks involved. I know that's a separate deal, but the reason I bring it up is because you are watching these big risky deals really starting to come to the market again after these banks took already fairly big write-downs when it came to those mark-to-market losses with the spread widening in the leveraged loan market. So there's a lot of questions floating around. I've got to say, you know, I was over at investor conferences today, even at SALT and Super Return, where investors are kind of talking about how big these losses can be in this quarter. Will they continue? And what will that mean for a broader investor appetite at large? So to your point, Alex, this could continue to be a rough market for underwriting, especially for riskier deals, and therefore feed back to the banks and the fees that they take on.